Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay coming to you on a Fed meeting minutes day. Oh man, that's so exciting for all you economists out there. And we're going to be watching to see what the Fed has to say about future rate hikes, what the economy looks like currently, and the market is going to make a move off of this. And I caution traders, don't follow that first move. Really give it some time to digest, see what happens overnight. And I think usually the next day is something we can look at with a lot more conviction as far as the new direction of the market, if there is one. So we'll be watching that. The VIX, for its part, still at 29. We know that's an elevated level, but that's not necessarily a screaming panic level. Even though in spite of this big sell-off, this big correction we've had, we have not seen this any real panic coming out of the VIX. And for my mind, this is really because the market selling off is really more about a valuation correction rather than any contagion or margin or credit risk situation, which we've seen in the past. So this is more of a stocks need to come back to earth because the economy is cooling off and because the Fed is not pumping liquidity into the market anymore. So that's what I'm watching for. And when it comes to liquidity, when it comes into valuations, they've come down a lot. If you look at the S&P PE, that's down to 20. The NASDAQ PE, that's down to 37. Historically, when they get overshot to the downside, they could be much lower. The S&P could be down at 12. The NASDAQ could be down to 20. So there's potentially, on the valuation side, a lot more downside risk for the market. For Equity Armor Investments, I'm Joe Tigay.